Hello, welcome to BQ Prime. You're watching a special interaction with me, Sajid, and my guest today is a person who heads the auto and farm vertical at Mahindra and Mahindra, Rajesh Jejurikar, ED and CEO of Auto and Farm. Rajesh, thank you very much for joining us on BQ Prime. Uh, to begin with, Rajesh, your earnings came in last week, and I don't want to go deeper into the numbers, but let's look at what you've been in the commentary that you have given with respect to, and one of them was with respect to the impact of El Nino, whether it can have an impact at all on your tractor sales and all. And that was an interesting commentary, which basically said that there is no relation at all between El Nino and tractor sales. Can you elaborate on it?
Firstly, thanks for having me on the show, Sajid, and pleasure to be on YouTube Prime. So, to your specific question on El Nino, we were actually, when we started looking at this with greater depth, we said, let's, look at what's happened over the last 50 years. And when we saw that data, it was quite revealing. And in 50 years, we have had El Nino in 17 years. And out of the 17 years of El Nino, there was a below average rainfall and below LPA, as they call it, in only 5 of the years. And out of the 5 years, the tractor industry had a negative growth in only 2 of the years. So when you interpret this data, it's quite clear that there's really no correlation between El Nino and tractor growth or degrowth. And actually, there's not so much correlation even between El Nino and low rainfall or below average rainfall. So really, I think many other factors come in play to impact the tractor industry growth, and really El Nino doesn't seem to.
So, how do you put those factors out in order of priority? How do you look at it, and how should the street look at it at those factors?
What's called terms of trade for farmers. So, what's the input price, what's the output price, and that's been under a bit of pressure with all the input inflation. But we see that improving over the last few months, where price realizations on finished crops has improved. Mandi prices have moved up somewhat, so terms of trade to the farmer are improving as well. So that's the second enabling factor. The third is, of course, then, how good was the previous crop. Right now, the Rabi crop is looking good. How good is going to be the sowing, and how good is the sowing is also linked to the sentiment around rain. So rains does play a role. Reservoir levels are important. So if reservoir levels are good and rains are not so good, then we could expect still a positive. So, multiple factors come at play, and these factors do change during the course of the year. So we often say that tractor industry growth has to be looked at multiple cycles and buckets during the course of the year. It's very hard to put one number out which you can hold on to for the whole year.
So, how do you look at the growth going into FY24? Do you see the same kind of growth rate? And what I saw was that the raw material prices hasn't softened much for the tractor segment at least. So, how do you see that growth coming in for FY24?
Yeah, first is your tractor industry growth we expect to be in low single digits. The reason for that is, it's F23 has been a pretty good year with a good industry growth of about 12%. We do 15%. We gain market share, so it's been a good year, and it's a high base now. So 940,000 odd industry. So on that base, we expect a low single digit at this point of time, but one never knows. We will wait and see how many things play out. Like I just explained, the multiple levers. One factor which is unfavorable in a manner of speaking to F24 is last year we had 2 Navratras. So the April Navratra moved to March this year, which does affect the industry by at least 3-4%, because that's about a 20,000 industry size, which shifted from April to March because March had a Navratra as well. So, I think we're basically looking at low single digit growth for the industry at this point of time. On the issue of commodities, I think that the way we would think about it is, again, we watch closely. We have seen some correction compared to the high peaks that were there, but we are nowhere near back to, where the F19 commodity prices were. So again, this is hard to predict, but let's wait and watch. A lot also depends on how China moves, by way of their economy and what happens in Western Europe and the US. At this point of time, China has not picked up as much as most people thought it would after COVID lockdowns got completed. So we'll have to wait and watch and see how commodity plays out.
You started giving your core tractor margins this time onwards, 18.3%. Do you expect that to expand as easing of raw material happens over the period of, especially rubber prices, which have a more direct impact on tractor sales?
Yeah, so we had this time first time put out, like you said, the core tractor margin just to help understand and interpret our results better. So F19, which is I just mentioned, was a very relatively low year for commodity prices, reasonably benign. Our core tractor margin in that year was 19.9, and in the last quarter we were 18.3. Quarter four is typically also a year of quarter of low volumes relatively because it's an off-season year. Of course, there was a little bit of Navratri this time. We don't know when exactly that will happen, but as they start coming down, clearly there's a margin upside available in that situation.
One of the interesting facts which I saw was entry into lightweight tractors, I think through Swaraj and Oja. How big is the market potential there? Because there your market share is below the industry average. I mean, your entire tractor market share average, right? So I think the intention is to take it up there. So what kind of potential is there?
Yeah, so that industry size about 45,000-50,000 per year for the lightweight industry, and we are planning to address that comprehensively with a launch on the Swaraj side. Swaraj launch is actually tomorrow, and we think that will be a very exciting launch. We have a very good product offering. And then on August 15th, we are planning to launch the Oja platform, which is actually 4 platforms because we get launched in phases. But you will have the first part of the Oja platforms also rolling out from August. So with these 2 launches, we will comprehensively address this segment. And as you rightly mentioned, our market share in this segment, the lightweight segment, is below our national market share. So we would hope to pick up market share in this segment, pushing our national market share up.
Rajesh, coming to the auto, I wanted to take tractors first because we normally concentrate on auto. So let me take tractors first because not much is talked about there. In the auto segment, you still face this semiconductor issue which is there, which is hitting your volumes by nearly 1,000 units per month. When do you see these semiconductor issues resolving or normalizing?
Yeah, so we lost about, as you said, couple of, actually more than 1,000. We lost 2,000 to 3,000 a month last quarter, which was about 10,000 units for the entire quarter on the SUV side. These were coming out of this specific shortage that we're having at the moment is specifically related to ECUs for airbags. They're coming out of a couple of suppliers that we have been having a problem with. The thing about semiconductors is going to be the volatility and the uncertainty. As our products are getting more tech savvy and tech evolved, we are seeing a much greater demand for semiconductors and hence a greater vulnerability. We've done multiple things to de-risk ourselves, have alternate suppliers and so on, which is why we've been able to ramp up our volumes overall so effectively. As you've seen, we are number 1 in the market share for 5 quarters and number 2 for the last many months on volume market share as well. So we've ramped up very well in between 32 to 35,000 range per month. We've set up capacities for about 39,000 now, which is in play. So we expect roughly a risk of 10 to 15% on semiconductors from time to time. That's broadly how we would see.
Is there a timeline or horizon you have by when it gets normalized fully and you can your alternative supply chains can kick in, and you can hit 39,000, because if I'm not wrong, you're trying to target 49,000 by Jan Feb. So is this semiconductor something which will linger on till the next financial year?
So most people around the world are saying the semiconductor uncertainty is expected to last a year or two. The capacities are still coming up, and while that's happening, there is going to be some stress on semiconductors, and we would expect that situation to hence impact India and us in some measure or some extent um, through the next few quarters. And that's not something anyone can predict. It can happen in any place, anytime. So we just got to watch, be on top of it, do multiple things internally, which we've already been working on.
49,000 is what you're targeting for Jan Feb. Are you on?
That's the setting up. Just to clarify, that's setting up of
the
the capacity.
Yeah. So,
Yeah.
I mean,
So when we set up capacity, we have to keep some headroom. Not necessarily say that's our target.
Exactly. What I was trying to come to was that you're getting bookings of more than 55, 57,000 a month, and there is this bottleneck which is coming, first capacity and second semiconductor, which is hitting you. How do we navigate this kind of challenge?
Yeah, so we will talk as a next phase of what capacity we prepare for as we go along. But right now the plan is to get to 49,000. That I think will give us a good visibility and a good term, and we'll start bringing waiting periods down quite a bit.
Rajesh, I was speaking to some of the CV makers, and quite a few of them were talking about how bullish they are in the medium to heavy commercial vehicle segment. You're in the LCV segment, under 3.5 and 2 ton, which you have launched, and that's doing very well. They claim that there is a slowdown happening in that segment. There's a bullishness which is there in medium and heavy vehicles. But how do you see this market playing out?
Yeah, we fortunately at this point of time introduced a completely new portfolio of pickups, and you spoke about the 2.1, but we've also done max pickup. We've gained a lot of share. We gained 5 share points in the less than 3.5 ton market, in spite of being leaders at more than 40% market share. So it's been a good run for us. There will be some price sensitive segment which may have been slowing down, when inflation was high. But I think as inflation is coming under control, GDP growth, we've seen very positive numbers just come out today. I think that's going to be good for this segment because, and we're hoping that the momentum on the segment will continue.
Coming to the electric vehicles, that's something entire market is waiting out for. Means XUV 400, you got good demand coming in, 20,000 odd bookings that you have already done. How do you see the ramp up happening? I understand that you were telling analysts that you will be very slow in ramping up till it stabilizes. When do you see that ramp up taking up?
Yeah, so you got that right. We have said that we do have these bookings, but we want to be cautious at the speed of ramping up. So we want to do 18,000 in the year, but we want to back end it towards the last 4-5 months and ramp up slowly, stabilize the product. This is the first time we're doing an SUV electric of this level of sophistication. We want to not rush into it, and we want to the many other elements, by way of selling system, service capability, charging infrastructure. So we want to build everything well as we go into market with our electric strategy. It's very fundamental to our long-term strategy. So we do want to be very slow and mindful in the ramp.
But how is this entire demand scenario which has come up? Are you happy with the kind of demand which has come in? Is there you yourself said that there's an infrastructure ramp up which also requires for EV, but do you see demand picking up for EVs going forward?
Yeah, we see very good interest, but we have to realize that this is not a segment where conversion is going to be like it's in the ICE world, where everybody is familiar with your brands or your products. So you've got to have an effort to explain the category to customers, help customers overcome resistance around what they may see as barriers to change and adoption of a new category. Charging infrastructure or charging facilities may be one of them, life of battery, the range, get confidence on range. So I think it's a category building effort, and a category building effort in a technology product always does take a little bit of time. So, but I think there is very, very good interest in the overall electric story.
See the born electric vehicles coming out. You have told us about the five models that are coming in. Is there a timeline by when we will start seeing them on the road?
Yeah, we had spoken about starting production of these towards the end of 2024 calendar. That I think is on course right now. First two, three products, and then we launch them all to the early part of 2025 in the market.
Rajesh, when
So we are on course with the dates.
I agree. When this comes in, it's going to change the way the P&L is also going to look, because the margins of EV are totally different from a normal ICE margins. How do you see that change happening? And the market always, or the street always looks at comparison between current and the previous, and this would change a bit. What kind of change that can be expected in this margin profile, and how to read it actually?
Yeah, so it's hard to say right now how we will communicate. We have to think about it. We are some time away from large part of our portfolio being electric. So we'll say 2027 we'll have about 20 to 30% of our SUVs is electric. So we're still some time away, and we have to address the question of how electric margin data will be communicated. And also, as battery prices move with time, what finally into the margin structure, price and market, all of these are factors that we will start addressing as we go along.
Anything you can share on the unit economics, how it works?
No, sorry, I can't put that out.
Okay. So my final question to you, Rajesh, you spoke about low single digit expectation of growth in the tractor segment. How do you see the auto segment faring, especially the SUV?
Yeah, so SUV growth we expected more than 10% for the industry, and we would expect to do better than that, and we expect to continue gaining market share as we now. So that's probably how we see it. The overall passenger vehicle may be a little below 10%, but we expect SUVs about 10 and us to grow faster than that.
Rajesh, it was a pleasure talking to you today. Thank you very much for joining us on BQ Prime.
Thanks again, Sajid, for having me on the show.
Thank you.